Listen, here's the thing. If you accept a lower payment overall, you better have a good reason to do it. I mean, that's any shareholder is going to tell you that.
You have a fiduciary duty to maximize
You sure do.
value.
So I'm sure there's a couple ways. And listen, I haven't had a chance to speak with Chevron management directly about it yet. I know Worth was on CNBC this morning. Maybe better off talking to Anadarko about why they did it. The Chevron was 75% stock, 25% cash. You could say this. Chevron stock has done very well. Occidentals has lagged a bit. So if you're a shareholder, you think you're getting a lot in stock, maybe you're just not a believer that the Oxy stock is going to continue. But they offered more money. Remember, it wasn't 70. It could have been more than 70, plus more cash. I think there are going to be some questions for Anadarko shareholders and management to answer.
What do we know about Anadarko? So Chevron, obviously, we're talking about now 3 or 4 biggest oil companies in the world. Anadarko, Occidental, these are more Permian players, is that right? They are more shale-oriented. What does this strategically tell us about this space?
Okay, well, they both are. Occidental and Chevron actually are the 2 oldest players in the Permian Basin. They've been there since the 1920s, each of them. What Chevron said in the call was they're buying property that abuts their own. So that matters. I mean, when I mean that, physically you're buying your neighbor's house because then you have the same trucks and the same people and you can move things around. So they're buying land that's physically close. Occidental, no doubt, I'm sure would be right there as well. But there's also an LNG perspective to this. Everyone's talking about the Permian, but Anadarko's got a huge offshore program in Africa, off Mozambique, and LNG is a massive play. And I think there's more to that than people are making.
Helima, what do you think about the macro setting here? You know, coming into this, we were all talking about how much oil was up this year, although on a 12-month basis, a little bit more even. We talked to Mike Kelly a lot about this, how investors in oil were far less optimistic about things than, I guess, people who are pushing up the price of the commodity. So what do you think is happening?
I mean, I think it's a really interesting story because what we're really seeing this year is we're seeing the majors go more into the Permian. When we think about where investment has been going since 2014, it's been going into these short cycle projects. The majors are really, yes, you've talked about them being there before, but we're really seeing them step up their exposure to the Permian, not in these long lead time projects, not really in these deep water projects. And so the question are 2 questions. First of all, will it deflate the cost even further for the Permian? So it will drive down costs to such a level. Can OPEC even compete with that? I think that's going to be potentially, is that an existential challenge for OPEC? If they can drive these costs down, can you essentially ever really put these companies...
That's why I'm so surprised that the oil price is up as much as it is this year on the OPEC supply cuts. It just appears there, between that and Venezuela, it's enough to tighten the market to this extent.
I mean, OPEC has been very, very successful this year, but the question people keep asking is how long are they going to continue to sit down barrels to accommodate shale? And the more that the majors go in there, the more that they potentially push prices lower, it's a question of, is OPEC going to have to keep cutting and cutting and cutting to make room for these companies? And you talk to some ministers, you know, OPEC countries, and some of them will say, really the days of us doing 2 to 3 million barrel a day cuts, those are over. So the question is, does OPEC have to go back to the drawing board? What does Saudi Arabia do about this?